All right, guys, so in this initial breakout part 3, again, we're talking about strategy number 1, but this is video part 3, lesson part 3, okay? So in lesson number 1, we talked about what the strategy is. In lesson number 2, we talked about how to execute the strategy, how you can place your entries, where you can place your stop losses, how you can place your targets, okay? In this lesson, lesson part 3, lesson number 3 of the initial breakout strategy, which is strategy number 1, we'll be focusing on my fine-tuning. Okay, so I have fine-tuned this strategy to pretty much to the point where I have an IBO A, IBO B, and IBO C. Every single one of them is a tiny bit different. Every single one of them has a different strike rate. One is safer, one is a little bit more aggressive, and another one is right in the middle of that. And we're going to be focusing mainly on the 4-hour time frame here, looking at the differences between the 4-hour time frames between the strategies, okay? Because the IBO strategy is mainly a rejection on a higher time frame and a break and retest of the 50 EMA on a lower time frame, right? The middle time frame, such as if you're day trading, the middle time frame will be the 4-hour chart. The 4-hour chart differs in a way, meaning that you can have a trend change, signs of a trend change, okay? That would be an A, IBO A. And IBO A is where you have signs of a trend change coming in, maybe like a double bottom, maybe a higher low, maybe a head and shoulder pattern, okay? Maybe a higher high. Some kind of a sign that the trend on a 4-hour chart is also reversing. You have a price action in your favor on the 4-hour time frame. And IBO B is where the 4-hour time frame does not have a trend change yet or signs of a trend change yet, but it's developing. Maybe a higher low is developing or a lower high is developing, okay? Part C, or IBO C, which is the third one, this is the riskiest one, and this is the one that has a 4-hour 50 EMA rejection prior to the entry, okay? Or yeah, so in day trading terms, it will be the 4-hour 50 EMA rejection. If you're looking at a swing trade, it will be, you know, the weekly 50 EMA rejection instead, okay? And I'll explain all of that on the charts. But the last one, the part C, the IBO C, is the riskiest one out of them all because it has rejected resistance prior to an entry, okay? So you can imagine that gives a little bit more risk. So, you know, I'll be breaking all of those 3 types of IBOs on the charts with full explanations. And again, just know that there's 3 of them and they range from safe to a little bit more aggressive, a little bit more risky, okay? So that's enough for the introduction, guys. Let's hit the charts and I'll show you exactly what I'm talking about. All right, guys, so in this example, we're going to be looking at the initial breakout A. Okay, so it's the first one out of the 3 examples I will show you, right? So as you guys heard in the introduction, I'm gonna pretty much go through how I fine-tuned this setup using the 4-hour time frame, right? So I'm gonna be looking at day trades here, so daily, 4-hour, 1-hour as the main time frames, right? But this is also gonna apply to swing trading. It's gonna be the middle time frame that we are mainly gonna be referring to, okay? So if you're swing trading using the monthly, weekly, daily, obviously this is going to be referring to mainly the weekly time frame, right? In this case, this is a day trade, so daily, 4-hour, 1-hour, so we're referring to the 4-hour time frame, okay? So it's fine-tuning the initial breakout strategy using the middle time frame, so in this case the 4-hour chart, okay? So in this example, I'm gonna go on and draw it out for you guys first using arrows and such, but mainly what I'm gonna be doing is I'll show you another example. So we'll go through another trade example just so you guys again have another example of an initial breakout. And this is a cool trade. I like this trade as well. But again, in this one, what I mentioned in the introduction, that I separated them by 3s, you know, so A, B, and C, initial breakout A, B, and C. So initial breakout A, that's the one we're focusing on right now. That's the one that has trend confirmation or price action confirmation on the middle time frame, in this case the 4-hour chart. So if we want to go short, place a bearish trade, a short position, okay, so the middle time frame in this case will have bearish price action, okay? So with that said, this is kind of what it's going to look like. So when talking about bearish price action, let's assume this is a 4-hour chart and I'm just going to be drawing out on the 4-hour time frame. Okay, so let's just assume that. So we have a bullish trend. Okay, there's going to be trades that just have a pullback. Okay, and we're going to start going short. You know, they look something like this, and on the 1-hour time frame, this is already giving us a breakout and we want to go short. Okay, this is going to be an initial breakout B. Okay, so you see it doesn't have much price action on its side. You know, imagine this is a 4-hour time frame. It doesn't have much bearish price action. It was just a pullback, and as we're taking the trade, it's developing a potential lower high, right? So that's a B. That's the initial breakout B, and we'll talk more about that in the next example. Initial breakout A is going to have bearish price action. So it's going to look something like this. It's going to have either maybe a double top or a head and shoulder pattern or a lower high already developed, or like a triangle pattern squeezed to the downside with a lower low, right? So some kind of bearish price action. We already looked at a bunch of bearish or price action patterns in general. We looked at the trend and what a trend is, you know, and how to identify if a new trend is developing and such using price action patterns, right? So we know price action patterns: ascending triangles, descending triangles, wedges, flags, head and shoulder patterns, double tops, all that kind of stuff, right? So that's what you're looking for on that 4-hour time frame. You want some kind of bearish price action to confirm your setup, okay? Or bullish if you're going long. So in this example, you're going to see that we're going to have a double top, then price goes down, and when I'm taking the trade, it's actually forming a lower high. Okay, so that's what you're going to see. So in this example A, we need some kind of price action in our favor on that 4-hour time frame, or weekly if you're swing trading, right? So I hope that makes sense. In this case, we're going to have a double top, and when I'm taking the trade, it's going to be a lower high. Okay, so the double top is our bearish price action. The lower high is the entry. Okay, so that is an A. And when it comes to the IBO A, the IBO A has the highest strike rate out of them all, simply because it has the most confluence on its side. The daily is good. The 4-hour is fully confirming it because of the price action, right? The double top. And the 1-hour chart has a full confirmation of the break and retest of the 1-hour 50 EMA. So the IBO A will be the best IBO out of the groups, out of the three, you know, because it does have highest confluence. Okay, the most confirmation. So I just wanted to say that before we really dive into the analysis. Okay, now I'm going to explain it farther by looking at this trade. So let me actually break down this trade for you guys, you know, to give you another example of an initial breakout. So what do we need for an initial breakout? You guys already know this stuff. You should know it. So what we need is a rejection on a higher time frame. We need to believe that what? A run or a pullback is starting. Okay, a run or a pullback is beginning. So we need to look at support and resistance levels. We need to look at candlestick formation and all that kind of stuff, right? So do we believe that a new run or a pullback is beginning? So the analysis here truly started to begin on the weekly chart. On the monthly time frame, you can see that the monthly chart could still go a tiny bit more to properly reject that monthly 50 EMA, right? It's kind of just chilling on it. So it still could go a tiny bit more to properly reject the monthly 50 EMA. So I'm not really utilizing the monthly chart in this analysis here. Okay, the analysis mainly begins on the weekly chart. So let's have a look at the weekly time frame here. And right away, you're going to notice we have really good resistance in this area. Okay, at around 94, 95, this general region, 94 and 95. And that's beautiful support, rejected once, twice, 3 times. And what was once support becomes what? Becomes resistance once broken, right? So it was broken over here and then came back to become resistance. And at the time of the setup, it started to decelerate and it actually formed a doji, right? So we don't have any bearish price action really on this weekly time frame right now because it kind of broke out to the upside. So this is a pullback play. It's simply a pullback play on the weekly chart. But we have confluence, we have a rejection, we have really strong resistance, okay? But it's a pullback play. So now when we look at the daily time frame, well, we got the same resistance level, same area, roughly 94, right? So if it's support and resistance on a weekly, it's going to be support and resistance on a daily, period, right? And we have it here. So one rejection, second rejection, third rejection. There's actually a couple more rejections here, you know? So it is a very good horizontal support and resistance level. And you can see that this trend has already been trending for quite some time. You know, we had the breakout, we had some consolidation. What is this? Do you guys know what kind of price action pattern is that? That's a flag, you know? So we have the arm, then we have the flag, and price action broke out to the upside. And now it's starting to decelerate. So it looks like the trend is coming to an end. But do we have a trend change yet? No, we do not, okay? So this on a daily time frame is still a pullback play, right? The trade was taken right there on the 22nd of November, okay? So that's where the trade was taken at this point, okay? And you can see that when we zoom in, we have beautiful candlestick formation, okay? So that's the first criteria of the initial breakout. This is the first criteria of the initial breakout here. Do we have a rejection? And do we believe that a new run or pullback is happening? And yes, we do have resistance. We did decelerate here with one high test reversal, pretty much a hammer right here, and another bearish high test reversal, okay? So we do have perfect candlestick formation, perfect deceleration, and we confirm that with this beautiful bearish high test reversal or shooting star, right? And at this point, when I saw that, I wanted to take the trade short. Now, we did have bearish confluence on a weekly time frame as well, and this trend is also coming to an end. So I wanted to push this as far as possible, okay? I wanted to play the potential breakout, okay? Play the potential weekly pullback instead of just the daily pullback. Knowing that we still don't have a full trend change on a daily time frame, therefore, I still need to keep an eye out on what? The 20 EMA, because you can clearly see it's holding support here, right? So I took the trade short here and I was holding and holding and holding it until it started exploding on a lower time frame. And to me, that was rejecting the 20 EMA, and I took my profit at that point. And I'll show you when we get to the lower time frames. But that was my kind of thinking behind it, because the higher time frames have decent confluence, you know, meaning that a weekly pullback can happen and this daily trend is potentially coming to an end. So I wanted to push as far as possible, but again, knowing the risk that we still do not have a trend change on a daily time frame. It's still a pullback in a daily time frame. The 20 EMA is holding good support, so I need to watch out around that 20 EMA. If it breaks it, great. If it looks like it's rejecting it, I gotta take my profit, okay? So that's my thinking behind this entry. So the setup is there, beautiful rejection, beautiful high test reversal. Now, what do we need on a lower time frame? Obviously, we need a trend change on a 1 hour chart, a break and retest, some kind of bearish price action, right? A break and retest of the 1 hour 50 EMA. So let's jump down to the lower time frames. And the trade happened here, you know, so you can see on the 1 hour chart, let's have a look at that first. We can see that the 1 hour chart had a double top. We had this trend line, we got broken to the downside, and then the trade happened when we came to reject the 1 hour 50 EMA, and it was pretty much exactly at this point right there. So not the cleanest 1 hour price action, you know, because you can see it's kind of moving sideways a little bit, but we do have that double top, we do have the bearish MACD, we did break down, you know, and that daily, weekly is great, you know, and you can see that the 1 hour time frame has been holding pretty good dynamic support and resistance. So the fact that we actually cleared that 1 hour time frame is great, you know. So it is an initial breakout, it does fit that criteria, and that's where the trade was taken. Okay, so before we look at the actual position, now, what about that 4 hour time frame? Which criteria does it meet? Does it A, B, or C? And as we talked about earlier, A is the one where we have price action or confluence in our favor, trend price action, you know, or bearish price action in this case. And we do have a double top on the 4 hour time frame prior to the entry, you know, and because we have a double top on a 4 hour time frame prior to that entry, this classifies as an initial breakout A, which is the best initial breakout out of the three, okay? Because other ones might not have a double top, okay? You'll see in the next example, there will not be a double top. It will be pretty much just kind of a pullback, you know? So in this case, since we do have that double top, which means bearish price actions potentially coming in, So now we have that weekly doji, we have the daily deceleration and beautiful candlestick formation. Now we have the 4-hour double top and a 1-hour breakdown and retest. This is perfect now. Every single time frame has confluence and every single time frame has confirmation. I do not need to wait for anything else. Everything is here, right? So now it's just about that entry. It's just about timing. So that's the A, that's the thinking about it, the thinking behind it. And now let's just have a quick look at the entry, so the entry came in here because I just want to break down the whole setup for you guys just so you have more exposure to it. So you see how the 1-hour chart was consolidating, right? And it wasn't just really doing much. So when the London session kicked in, you can see again, the volume started to spike up to the upside. It was down during the Asian session, and then this is a pound pair, so then the volume started to spike up during the London Open, and as the volume started to spike up during the London Open, I pretty much took the trade right here. With a stop loss again, we have our Fibonacci levels there. So stop loss was 70 pips or so. Right, and I was looking to target as far as possible, so my target placement was pretty much, let's have a look at the daily time frame. The maximum target placement that I would have been looking at would have been pretty much the previous highs in the daily 50 EMA, right? That's where I wanted to really push it, because I know that we still do not have a trend change on our daily time frame, but I know there's more potential there. So I wanted to push to the previous highs here on a weekly and the daily 50, so that's pretty much 89, 1.89. So if I put 1.89 in here as the target, right? So I was looking for roughly a 7% position, right? So pretty good trade, 7%, that's not bad. Obviously it didn't get there, but that's what I was targeting, so let's zoom out now. So that was the entry. Now, I don't know if I covered that, but I didn't place an order simply because of the consolidation here, right? It wasn't perfection on the 1-hour time frame to the consolidation, so I never placed an order. I wanted to make sure that there's a live entry, right? Because of that. If the 1-hour time frame looked better and there was no consolidation, this is perfect time to place an order. Yeah, let me cover this actually, because with an IBOA, because an IBOA has the best confluence out of the three, because it has the 4-hour chart fully in our favor, right, with bearish price action in this case. So with an IBOA, typically I'm more willing with placing orders. I place more orders with an IBOA than a B or a C. Okay, because an IBOA has more confluence and therefore I have more confidence behind it. And because I have more confidence behind it, I'm willing to place an order rather than wait for an entry. Okay, so if I just want to chill out for the night or do something during the day, I will definitely be placing an order on an IBOA. Okay, but in this case I didn't, simply because that 1-hour chart was just consolidating and I wasn't doing anything that day, so I just wanted to make sure I have a live entry for extra confluence, right? So that's just the thinking behind that. But now let's just kind of zoom out and see what happened here. So I hope that's starting to make sense, right? So an IBOA, you're pretty much just looking for that bearish confluence on the middle time frame, which in this case was the 4-hour chart. And the trade looks like this pretty much, so that's what it looked like. So when I was running at full profit, that was down here, and I was at that point sitting at, it's hard to see right here, but 288 pips, okay? So let's just say 290 pips divided by 70. So I was sitting at 4% right there, so it was looking great. I was sitting at 4%. And at this point, when it was at the lows, so see, that was that one day, it just accelerated to the downside and it was sitting at 300 pips at the lows. And when we look at the daily time frame, that was right there at the lows as it was breaking that 20 EMA. So at that point I thought, okay, perfect. You know, the 20 EMA is probably going to be broken because look at that acceleration here that we witnessed. And then all of a sudden, I placed an alert because part of my strategy is to, you know, keep an eye out on these overextended runs because I know there's potentially going to be a big pullback. So I had an alert placed on roughly right here to just make sure that if it starts breaking that 5-minute 50 EMA, I want to see what's happening, you know. And then all of a sudden my alert was triggered. I come on the charts and I'm like, what is going on? You know, price is exploding to the upside, and I was already running at such a good profit. So when the price started exploding to the upside, it took me a minute or two to figure things out, and I ended up exiting exactly right there on that 5-minute time frame. You know, so my alert was triggered right here, and it took me like 5 minutes to get on the charts, see what's going on, and exited. And I exited for, you know, not 4%, but at that point 170 pips, so just a tiny bit over 2%. You know, so that's trading for you. Things like that will happen. You know, all of a sudden it's looking great, and then boom, it just explodes to the upside. You know, so you have to be on your toes. You gotta know how you're gonna react in certain situations. And later in the following lessons, I will again show you exactly, you know, the different management techniques for different moves in the market. You know, so this is more of an aggressive kind of management, and more conservative management probably would not have exited there, and therefore would have lost a little bit more profit, you know. But there's benefits to all, and I will explain all different management techniques, you know. But again, that's it for this example. So I just wanted to really focus on what is an IBOA, and simply an IBOA in this case is the double tops, but it can be other price action patterns as well. Simply with an IBOA, you're making sure that middle time frame, such as the 4-hour chart or the weekly chart for a swing trader, making sure that the middle time frame has bearish price action or bullish price action if you're going long in your favor. If it does not, then it's probably an IBOB. So let's have a look at the IBOB right now to see what it actually looks like. Okay guys, so in the second example, we will be looking at the initial breakout B. Okay, so it's the second type of initial breakout, and this is the one that you're waiting for a trend change. Okay, this is the one that does not have that 4-hour confirmation yet, but you're waiting for it. Okay, so let me draw it out first. In the first example, you obviously saw one with a trend change. So we're looking at the 4-hour chart right here really quickly, and we don't have those double tops in this case. Still a great setup, but we don't have the double tops, or we don't have really any bearish price action, right? So I'm gonna go over the full trade just like I did in the previous example, okay? But first, let me draw it out for you guys, you know? So let me actually show you what this is supposed to look like, okay? So with that said, let's go back to the arrows. So imagine again, a bullish trend to the upside on a 4-hour time frame, or the weekly time frame if you're a swing trader, right? So the middle time frame of the three that you're looking at. So on the 4-hour chart, you have this bullish run to the upside. The last, you know, you're assuming that there's going to be a trend change. And at the time of the setup, right, so we have a high test reversal. And we remember when we talked about in the candlestick formation lesson, confirming using multi-time frame analysis, so the candlestick formations part 2, okay, that a high test reversal can be a potential just a pullback, you know, on a lower time frame. So if a high test is just a pullback, well, you need to be a little bit more cautious about that because it could be a trap, right? And this is where the traps would come in. To be honest, the initial breakout strategy, specifically B, initial breakout B and an initial breakout C, you have to be a little bit more careful about them because they can be traps, specifically if it's a high test reversal, which just caused because of a pullback. So if you imagine, you know, during half of the previous day it was moving up, and then during the second half of the previous day it started moving down, right? This would give us a high test reversal, as you guys learned in the candlestick formation lesson, right? Part 2. So imagine this is kind of what we're seeing. Then we get this pullback, which is a 1-hour retracement to the 1-hour 50 EMA, right? And at the time of the entry, it will look something like this. So a potential lower high is forming. So an initial breakout initial breakout B, right, is where a potential trend change is happening. Okay, you're waiting for a lower high. You believe that a lower high will be there. Okay, we don't have it yet. It's developing. So we don't have bearish price action yet, but it's developing. So when you're taking this position, when you're executing this position, you have to be sure that the 1 hour rejection is good enough, or the whole setup is good enough, that you're believing that when you're executing that trade, you're executing it, and at the same time you believe that a lower high on a 4-hour chart is developing, or a lower high on a weekly chart is developing, assuming a short position, and the opposite for a long, a higher low for a long, right? So that's what you need to be believing, because again, we don't have that trend confirmation. So you have to be sure that, you know, a lower high will be forming on that 4-hour time frame when you're taking that trade, right? So again, an initial breakout B does not have a trend change, but you're believing that a lower high is forming when you're executing that trade, which a lower high is a trend change, right? It's the first sign of a trend change, right? So we still have it, it's in the making. Whereas with an initial breakout A, it's already there. With an initial breakout B, it's in the making, okay? So that's the difference here. So initial breakout B, this is going to be one of the most common initial breakouts, to tell you the truth. Some of the most of, at least in my experience, initial breakout B is one of the most common ones, okay? Which is just happening because of pullback and a lower high developing, okay? So you have to be ready to execute these ones, and you got to be a little bit more patient when executing these trades, because again, it doesn't have full 4-hour confirmation. Okay, so that's where patience comes in, and you really have to be sure that it's a good trade. Okay, so with that said, that's it for now. Okay, let's jump on the higher time frames. Let me explain the whole setup for you guys, just so you guys have another example of an initial breakout. So let me do that first, and then when we jump on the intraday charts, I'll explain the initial breakout B again. Okay, so with that said, this is a trade I took. It's an ASEAN short, and again, what are the criteria for an initial breakout? You got to believe that a run or a pullback is happening. You got to believe that a level was just rejected and a new run or pullback is happening. So do we have that? Right, so when we look at the daily time frame, we obviously have a little bit of resistance in this region at roughly 89. Okay, previous highs, intraday highs, you know, and current intraday highs, okay, at 89. At the time of the setup, right, this is a pullback, because you can see that we started a bearish trend, right? What was this? Left shoulder, head, right shoulder, slanted neckline, right? We learned about this pattern. So it's a head and shoulder pattern with a slanted neckline. Lower high, lower low, lower high, lower low. Okay, so we started this bearish trend. Then all of a sudden a higher low, and boom, exploded back up to the upside, right? So we still have, right now we just developed bullish price action, but we're still holding that resistance level. And if you zoom in closer at the actual candlestick formation, well, this looks kind of like a tweezer top, you know, but it's also kind of like a fat doji. I would call these guys also fat dojis, you know, because they have like these larger bodies, you know, than a typical small doji. But to me, this is more of a double top, a tweezer top, I mean. So this is more of a tweezer top candlestick formation, and I took the trade on this day. Okay, so as it was rejecting that level, I took the trade right here, you know, playing that breakout. Okay, so that is that for the daily chart. So it's a pullback play, and because it's a pullback play, it's only a quick position, right? But let's have a look at the higher time frames. Do we have anything on the higher? So the weekly chart, well, we got resistance, right? The previous highs in that general region, but at the time of the entry, we didn't have any candlestick formation, we didn't have a doji, we didn't have a high test, so we don't know yet whether the weekly chart is going to be rejecting or not, right? No idea. And the daily chart is just a pullback, so if we don't have a double top on a daily time frame, then the weekly chart is definitely not rejecting yet, you know, because we don't have lower time frame confirmation. Monthly chart, well, the monthly chart is all right. You know, it was much better a few months ago, 3 months prior, when we had this high test and this, what is this? Rising wedge breakdown to the downside, right? So when we had that high test, it was much better. And at this point, I still believe it's going to continue lower, but, you know, we need a little bit more confirmation for that. Oh, what's going on here? There we go. So we also have resistance in this area. So just as we saw on the daily time frame, you can see that this resistance goes a little bit farther out on the monthly chart, all the way to, you know, 2011. So we do have resistance. It's good. We do have resistance on a weekly, and we do have resistance on a daily, but there's no confirmation on a weekly. There's no confirmation on a daily of a larger move. So simply, this is just a pullback, and because I see this as just a pullback, to me it's a quick one-to-one position. It's just a quick move down to the 4-hour 50 EMA, a proper initial breakout. Okay, so now let's have a look at the intraday charts, and here we go. You know, so this is what the intraday charts look like. And we do have like a slight double top on a 1-hour chart, right? So the next criteria is the break and retest of the 1-hour 50 EMA, right? So we have this breakdown and then a retest, but this is a little bit more discretionary, okay? So let me talk about that a little bit more. I'm actually gonna jump back in time to the watch list creation point, you know, when I was making my watch list. So check this out. I'm gonna take you step by step with this example, make it really good. You know, so step by step, 22 GMT, that's when a new daily candlestick forms at 22 GMT. You know, that's pretty much when you'll be making your watch list, your day trading watch list. I'll jump on the 4-hour time frame to the exact same point right here, okay? So check this out. So you see that the 1-hour chart already fits the criteria of an initial breakup, right? Slight double top, breakdown, and a retest of 0.38 to Fibonacci and the 1-hour 50 EMA, right? The criteria has already been met. So you can already look for a short trade. If it broke the 5-minute 50 EMA right here, that would have been a potential short position. But look at the 4-hour chart. The 4-hour chart is a trap, okay? This is what a bear trap looks like at this point. That's why a lot of initial breakout Bs, they start off as potential traps. That's why you need to wait for more confluence, more confirmation, because look at this. We have absolutely zero bearish confluence on that 4-hour time frame. Nothing, you know? So when you draw your Fibonacci retracement, that's also a 0.32 Fibonacci retracement. This can just continue going up and up and up and up, or it can just continue to form double tops, you know? So you cannot jump onto this position with a short trade without any other confluence. So what do I need? Okay, well, what I would need is either a really strong reversal candlestick formation on that 1-hour time frame. Okay, this is important because this is how majority of the initial breakout Bs will look like. Okay, they will be proper initial breakouts from a daily to the 1-hour, but that middle time frame will be sketchy. The middle time frame might be a potential trap, and because that middle time frame might be a trap, what are you? You're a professional risk manager, like I told you in one of the previous lessons, you know? So forget about making profit, think about conserving capital as #1 priority, okay? So if conserving your capital is your #1 priority, well, then your priority is not entering into this position to make profit. Your priority is patience in making sure that you actually have a proper rejection before you execute that trade, because you're a professional risk manager instead, right? And that's what separates the winners from the losers, literally, you know? So with this example, patience. So let's go chart by chart, okay? Candlestick by candlestick, and see what actually happens here, okay? So check this out, candlestick by candlestick. I'm gonna, on the, yeah, let's move 5-minute candle by 5-minute candle, all right? So check this out, 1-hour chart. I'm gonna quickly just move on the 1-hour time frame, and it's moving up, and nothing happening yet. There we go. We broke that 1-hour 50 EMA, okay? So at this point, I'm like, okay, there's better be something really good here, because at this point, I'm already starting to kind of ignore this setup. You know, I'm not that interested in it anymore, but I'm still keeping an eye out on it. It's obviously still on my watch list, you know, but it's kind of a secondary play now. Okay, and now it broke out even higher. So it's not a perfect looking setup anymore, okay? But it's still on my secondary watch list. I still want to see what it looks like. I like the daily chart, you know, there's a potential there. So I just want to make sure it's good. And what do we got here? No, now it starts to accelerate to the downside. Okay, so now I want to see the 4-hour chart, okay? Because if we were looking side by side, we would see something totally different on that 4-hour time frame, right? Because now we're starting to accelerate on the 1 hour. So let me take you to that time on the 4-hour. So see, this is where it exploded. This is the 4-hour chart is pretty much right now when the 1-hour chart was rejecting 0.618 Fibonacci, right? Same level. And you're gonna see soon what I'm talking about. Boom, okay? So now it's starting to accelerate. See where the 1-hour chart is? The 1-hour chart is sitting at 88.73. Okay, the 4-hour chart is at 88.73. So it's perfectly synced. Okay, let's have a look at the 1-hour chart. I'm actually going to jump back on the 1-hour time frame to that exact same point. 88.73. Here we go. Check this out. Okay, so see what's happening right here, right now. Right here, what do we have on the 4-hour time frame? Obviously, the 4-hour chart still has 1 more hour till it closes. The 4-hour chart pretty much closes at the end of this hour, you know. So you see how the 1-hour chart is accelerating? That's when the 4-hour chart is going to close at 2 a.m. GMT, okay? Which is the next candlestick on the 1-hour time frame at 2 a.m. GMT. That's when that 4-hour chart is going to close as a what? A high test, potential high test, and what? A lower high, okay? So if it closes as a high test and a lower high, it's going to have bearish confirmation. And then it's going to be a perfect trade, okay? It's going to have a high test with a lower high. But we cannot wait till the hour closes because look at this momentum coming in on that 5-minute time frame. So let's go candle by candle. Boom. All of a sudden we have a live entry right now. What is the 1-hour chart looking like? Boom. What is it? A bearish engulfing. What about that 4-hour time frame? Beautiful bearish high test reversal happening. This is, at this point, I have full confidence in this setup. 5-minute chart is accelerating to the downside. I have no doubt with that. That's a live entry. That's massive acceleration, you know. The 1-hour time frame is looking like a big bearish engulfing, rejecting 0.618 Fibonacci, okay. So I have zero doubt there. That is a reversal candlestick. That is a lower high. And I look at the 4-hour chart. That is also a bearish high test in the making. That is a lower high, and that is my trend confirmation. At this point, I am sure that this is going to go down. At this point, I have zero doubt, you know, that this will continue, that this will not go down, you know. So in my opinion, this will not go up anymore. Massive acceleration to the downside. Obviously, anything can happen, but seeing the charts right now, I am taking this trade. Okay, so at this point, as that 5-minute chart closed, okay, at this point, I executed this position exactly like this. Okay, this is my entry. So my stop loss. What is my ideal stop loss on an initial breakout? You guys know it, 0.75 Fibonacci. Okay, so there it is, 25 pips, 0.75 Fibonacci. What is my ideal target for a quick play on an initial breakout? The 4-hour 50 EMA. So 35 pips, targeting the 4-hour 50. That is the ideal target. That is the best target for an initial breakout. Unless the higher time frames are great and you're pushing farther, okay? But in this case, the higher time frames are telling me what? It's just a pullback play, right? Weekly chart doesn't have anything. Daily chart is just a pullback play. If it was a double top, it would be totally different. But in this case, it's just a pullback play with not much on the higher time frames at this point, you know, except resistance. So quick play down to the 4-hour 50 is the best option. So that's the entry. Now let's go candle by candle. Now we're slowing down, okay? So another kind of doji on a 5-minute chart, but we're already in this position. And boom, accelerating to the downside. So if we waited, we would just miss it. If you waited, you would have just missed this setup right now. At this point, you missed it. There's no point of getting into it. If you were trying to catch it, at this point, you're trying to catch a ship that has already left port. And you drown and sink, you know? So you gotta be a little bit more patient. If you missed it, then you missed it. You can't catch it anymore. Look at that, accelerating even farther. Boom. Now the hour is still not even closed, you know. Let's actually fast forward a little bit. Let's fast forward to the entry till it hits profit target, you know. Which had a lot of consolidation. So let's fast forward on the 1 hour chart. So see, the 1 hour chart closes a bearish engulfing, right? So it looked like nothing, but you see how quickly charts can develop when you're looking at the intraday levels, you know? So it looked like nothing was gonna happen. It looked kind of sketchy, you know, when it broke that 1 hour 50 EMA. But as you saw, when it started accelerating, the 1 hour chart all of a sudden massive bearish engulfing, the 4 hour chart a beautiful high to reversal, and look how it closed, you know? Beautiful reversal, beautiful acceleration on all time frames, right? So now at this point, it's all about just letting it ride till it hits that 4 hour 50 EMA. I'm sorry guys, I'm just stopping the mouse here really fast, so if you're hearing noises, that's it. And boom, 4 hour 50 EMA was hit. Let's do that same thing on a 1 hour chart. Boom, 4 hour 50 EMA hit and 5 minute time frame. Boom, entry, profit, hit, right? So you see, this is a proper example of an initial breakout B. Okay, this is what it's supposed to look like, and in real time. So we just saw how this was executed in real time, and that's how patient you have to be with an initial breakout. If the 4 hour chart looks like a trap, if the 4 hour chart looks like it doesn't have any bearish confluence, you know, because that's what an initial breakout B will look like. It will just be a pullback and you're waiting for a lower high to develop. This is the kind of stuff that you need to see. So when I was executing that position, I was already so confident in the setup because of the acceleration on the 5 minute time frame, because of that bearish engulfing on a 1 hour chart, because of that beautiful 4 hour high test that all of a sudden started to develop. And guess what? That 4 hour high test was also a lower high at that point. So everything was perfect. Plus we had massive acceleration to the downside, you know, and that is how patient you have to be. And that's the kind of clarity and the confirmation that you need from an initial breakout B. Okay. So now you guys already saw initial breakout A, that's with full confirmation. And that one is the safest out of the three. You know, then you have initial breakout B, which is the second safest out of the three. Okay, and with this one, you already have to have a little bit more patience because you need to make sure that 4 hour chart will actually give you trend confirmation, you know? So either that or you're waiting for like a perfect 1 hour reversal so that it gives you more confluence. Pretty much with a B, you're always waiting for more confirmation, more confluence, whether it be with a 1 hour beautiful reversal candlestick or that 4 hour high test or something developing, right? You just need more confluence, so that's where more patience comes in. And the next one, in part C, that's gonna be the worst out of the three, but that one's gonna have a 50% strike rate, whereas this one for me has about a 60% strike rate. Same one with A. A has a little bit above 60 for me, you know, but C has a 50% strike rate, okay? And with that one, it has to be approached a little bit differently. It cannot be a quick one-to-one position down to the 4 hour 50 EMA because it's a 50% strike rate. So let me stop that right here, and in the next example I'll explain that a little bit more. So that is it. Again, initial breakout B. Let's have a look at the next one, guys. All right, guys, so in this last example I'm going to talk about the initial breakout C, or the IBO C, initial breakout C. So the initial breakout, the C, the third one, is, like I said earlier, it's the one that has the lowest strike rate out of them all. It's still good, you know, but you just got to be aware that it has the lowest strike rate out of them all. And it's the one that has the 4 hour 50 EMA rejection. Or if you're swing trading, it would have the weekly 50 EMA rejection, okay? So everything else would line up with the higher time frames, with the daily, with the 1 hour. So if you just looked at the daily and the 1 hour, it would be a perfect trade, you know. But if you add the middle time frame, like the weekly or the 4 hour, in this case, you know, in this case the 4 hour, then you would notice that, okay, there's a little bit of an issue because there's a 4 hour 50 EMA rejection at the time or prior to the entry. Okay, that's the most important, prior to the entry. And that's a risk factor. So before I actually dig into the actual lesson, let me again explain the trade like I have been doing in the previous 2 examples, just again to give you guys a little bit more exposure. I'm gonna go through this one a little bit faster because I think you guys are picking it up. So what's the first thing we need with an initial breakout? We need to know whether a new run or a new pullback is beginning. So we need to know that there's a good rejection of a certain level, okay? So right away, when you look at the daily time frame, the trade was taken right here, right after the bearish engulfing, okay? So there's some support here, but other than that, you're gonna notice that there's a lot of resistance there too. So the trade was taken right there, right after that bearish engulfing reversal that's been happening, okay? This was Friday. So the trade was taken on a Friday. It's important to know that, okay? So the trade was taken on a Friday, right after this bearish engulfing. Now, there is a horizontal resistance level there in this general region. You also have MACD divergence as well. You know, we're making higher highs. MACD just made a lower high. Okay, so we do have divergence and we do have this bearish engulfing. Okay, and again, the trade was taken right here. So what about the higher time frames? Do we have anything there? Well, monthly chart. At the time of the entry, the monthly chart was developing this beautiful deceleration and this rejection of the monthly 50 EMA. And as I mentioned, there's resistance there, or there's resistance in this area, right? In this general region on a monthly time frame, we have resistance. So roughly 88 or so, okay? So at 88, we have resistance. And what is this? This is a continuation head and shoulder pattern potentially, right? Left shoulder, head, double tops, breakdown, neckline, right shoulder, right? So it could be like this continuation head and shoulder pattern. However, the most important thing here is this break, the retest, and the rejection and the deceleration that's happening around the monthly 50 EMA. So this could be a longer term trade. You know, the monthly chart is giving us some good confluence. Then the weekly time frame is the same thing. At the time of the entry, the weekly chart was closing as this bearish high test reversal. Okay, so the trade was taken during this week. Again, it was taken on a Friday, right? The week closes on a Friday. And when that daily bearish engulfing candlestick closed on Thursday, you know, the trade was taken on a Friday, so the bearish engulfing was Thursday. Well, at that point, we already were developing this high test reversal. And again, it was just 1 day left to go. Okay, so at that point, when I saw that the weekly chart was developing high test reversal and it was already Friday, at that point, I was already pretty confident that the weekly chart was gonna close as that high test. Now, the monthly chart is showing you a bearish run, right? A potential bearish continuation, correct? However, what is the weekly chart showing? We were in a bearish trend. We broke out to the upside. The weekly chart is a pullback, okay? So I'm not gonna target a monthly run, I'm gonna target the weekly pullback because the weekly chart does not confirm the monthly bias, right? It doesn't. And if the weekly chart does not confirm the monthly bias, the rejection on a monthly chart is good, but that just means the weekly chart still needs more development. It could break down and then form a lower high and continue, but I'm gonna be more cautious and just target the weekly 20 EMA, right? Play the weekly pullback. And then if more price action develops, I'll take another trade once there's more confluence on a weekly time frame when it comes to the trend, right? So in this case, I was just taking the pullback play down to the 20 EMA, okay? And then that's when the daily bearish engulfing was happening, right? So that's the analysis. So that's the rejection. That's the higher time frame confluence that's happening, right? So check mark 1, you know, we have that check mark. We do have a rejection, and I do believe that a new run, in this case, a new run is beginning. Not a pullback, more of a run because of this. Well, it's kind of a pullback, but more of a run on a daily time frame, right? Pullback on a weekly. So now the intraday charts, what do you need? 1 hour chart, break and retest off 1 hour 50 EMA, and in this case it's a perfect 1 hour time frame. Let's look at that first before we dig into the 4 hour chart, right? Left shoulder, head, breakdown, retest, right shoulder. What was once resistance became support, became resistance. Plus we get the 1 hour 50 EMA, and we also have 0.38 Fibonacci retracement there, and the pivot, So everything's lining up beautifully as resistance. 1 hour 50, 0.32 horizontal resistance line and the pivot. Beautiful resistance, okay? And then price action decelerated here, formed a little high test / doji, and the trade was taken short based on this head and shoulder pattern. On top of it all, we also have bearish MACD. This is a perfect 1 hour time frame. Great higher time frames and a perfect 1 hour chart. Okay, so this is, if you just looked at the higher time frames and the 1 hour chart, this would be a beautiful trade. However, the issue comes in on the 4 hour time frame because of this 4 hour 50 EMA rejection. Okay, so this is what I was talking about. You saw the IBO, so the initial breakout, number A, has a trend change, has like a double top or some kind of price action pattern in our favor, right? B is developing that lower high. Okay, so with a B, you need to be more cautious because it could be a trap, and it's developing the lower high. You're waiting for the trend change to happen. As you're taking the trade, you believe that the trend change is happening at that point, right? C, doesn't matter if there was a trend change or not, C will it's only C if it rejects or touches the 4 hour 50 EMA. So it could be a trend change, it could be a double top and then it rejects the 4 hour 50. Okay, or it could be just like this, rejecting the 4 hour 50. What I'm talking about here is a 4 hour 50 EMA rejection that causes the pullback. That's the most important. Okay, a 4 hour 50 EMA rejection that causes the pullback, causes the 1 hour pullback for the entry. Okay, so as the 1 hour chart was sitting here, that's when the 4 hour 50 was being rejected, as you guys can see, as I move my cursor. So right here, the 4 hour 50 was being rejected, and that caused the pullback for the beautiful 1 hour entry, okay? But the issue is the 4 hour 50. So how do I approach this, okay? So personally, I have a 50% strike rate, roughly a 50% strike rate with these setups, whereas the other two are in the 60 range, okay, for me personally. So because I have a 50% strike rate with this, well, for me, it doesn't make sense to take a 1-to-1 trade, okay? So with a C, I will never take a 1-to-1 trade down to the 4 hour 50 EMA. With an A, I will. With a B, I will. With a C, I will never take a 1-to-1 trade. Why? Because I have a 50% strike rate. So if I take 1-to-1 trades, it doesn't make sense because I will just always be at break even, period. Half of the time I will win, half of the time I will lose. And if my strike rate, if my reward risk ratio is 1-to-1, that's important. If my reward risk ratio is 1-to-1 and my strike rate is 50, I will never make money, right? The strategy will never make money. However, it doesn't mean that it's a bad strategy. It's only got a 50% strike rate, but it doesn't mean that it's a bad strategy. What if I can take a 2-to-1 or a 3-to-1 or a 4-to-1 or a 5-to-1 or an 8-to-1? You know what I mean? Anything above 2-to-1 makes sense. So when it comes to a Lewis Malkin method C, I aim for around 3%. Okay, so I'm only gonna take a trade where I believe the higher time frames are good enough for me to make about 3% or more. Minimum 2%, but I like 3% or more. I will never settle for 1. I will never take a 1-to-1 trade with a ABOC. Okay, never. I will always look for 2-to-1 minimum. I will like 3-to-1 or higher, okay? And that's extremely important because at that point, if I'm making 2-to-1, 3-to-1 or higher reward risk ratio, I will always be in profit, even if my strike rate is 50%, okay? Even if it drops a tiny bit as well, and I average 3-to-1, I will still be in profit with a 1-to-1 not. So that is extremely important for you guys to know. And again, your numbers might be a little bit different, but that's something that you guys will figure out later when you have enough trades to actually look at and figure out what is your strike rate with these strategies. So you have to experience that on your own first. You have to take plenty of trades and then you'll figure out, okay, what is my strike rate? But this is my experience. I'm teaching you guys my experience. So based on my experience, this is what makes sense, okay? So let's have a look at the entry. So it's also the same thing as with a B. I will rarely place an order. I will only place an order if I believe it's like a great setup overall. I want to take it. It's an awesome reward risk ratio. The only negative is that 4 hour 50. If that's the only negative, and maybe I'm traveling or something and I cannot be on the charts, and if that's the only negative, then I will still place an order. But in majority of the other cases, if I can be on the charts, I will wait for that deceleration, because sometimes that 4-hour 50 EMA can be rejected and price action will go to make double tops on a 4-hour time frame before it breaks down. So the 1-hour 50 EMA could fail. So with this one, it's nice to have confirmation. It's nice to wait for a live entry or some awesome reversal candlestick, on the 1-hour time frame, to just make sure that, okay, the 4-hour momentum based on that 4-hour 50 EMA rejection, so the 4-hour momentum to the upside is now gone, because the 1-hour chart has been decelerating for the last 3-4 hours or whatever, and now it has this beautiful high test or beautiful rejection with a 5-minute break to the downside. If that's the case, at that point I will take that trade. Okay, so I will simply wait for deceleration, for extra confluence because of that 4-hour 50 EMA bounce, right? That's just, again, professional risk manager, right? That's what you want to be, and that's how this would be played out. So again, the trade happened here on the breakdown, as the 5-minute 50 EMA was broken. So we rejected the pivot beautifully, rejected all the 1-hour levels, 0.32, 1-hour 50 horizontal support and resistance line, rejected it all beautifully, and then broke that 5-minute 50. And at that point, that was my trade short, okay? And stop loss was typical stop loss. So what is my typical stop loss? 0.75, Fibonacci. So 0.618 minimum, but with these ones, I like to have 0.75, so I like to, if I can, I like to have my stop at 0.75 Fibonacci with these initial breakouts. It doesn't matter which one it is. I still like to have my, whether it's an A, B, or C, still like to have my stop somewhere around 0.75 Fibonacci, okay? In this case, it just ended up being a little bit higher, but it's around that area. And then take the trade short, so I was targeting, that was my entry, that was my stop loss, and I was targeting the weekly 20 EMA, playing the weekly pullback, okay? And that resulted in a reward risk ratio of, let's find out, of 4.8%, so I was looking at roughly 4.8% on this trade. I didn't end up making 4.8%, but that's what I was targeting. I was targeting 4.8%, okay? Now, the reason why I didn't end up making 4.8% is obviously because my management strategy told me to exit before that, So again, I'm not a crazy long-term person. You can be, and again, there's various other ways to manage a longer-term position, okay? But I like to be kind of in the middle. So I will push it as far as possible, but if I believe it's reversing, the trend is reversing, I will take my profit and move on, okay? Others who are a little bit more long-term, they can let it ride. And I will teach you that after we finish all the strategies. I will show you other management techniques, okay? But with this case, I just ended up taking profit. You see how the 4-hour chart was giving me a double bottom and then started exploding to the upside. Same thing on a 1-hour chart, double bottom, deceleration, started exploding to the upside. Bullish MACD on a 1-hour, bullish MACD on a 4-hour. All of that was happening on and near that daily 50 EMA, right? So it just wasn't breaking that daily 50 EMA. And as the 5-minute 50 EMA was broken back to the upside after that double bottom, I just ended up taking profit. So I made just over 2%, which is perfect. Still it's above 1, and I like to aim for minimum 2%. So I ended up making, just over 2% on this position. So good, 124 pips was made, 60 pips stop loss, so just over 2%, which is exactly what I need for the initial breakout C. A minimum of 2. Target more, but minimum of 2. And that will always, with that kind of setup, with that kind of reward risk ratio, doesn't matter if you have a strike rate of 50%, you will always make profit, So that's extremely important. So, the only thing for you to know here is that with a initial breakout C, at least I don't like to target. I don't want to tell you what to do. I'm telling you my experience. I personally don't like to target the 4-hour 50 EMA like with the other initial breakouts, okay? So I will only take this setup if there's a longer term opportunity, So if there was nothing, absolutely nothing here on a monthly or a weekly, I would not be taking this setup. If I had to target the 20 EMA because there was absolutely nothing on a weekly, nothing on a monthly, I would never take this trade because it would mean a 1-to-1, you know, and it wouldn't be worth it. So I ended up taking more, okay? So with that said, that is it for this strategy. Let's see how it kind of played out just so I can show you. So this is where I exited exactly at that point. And then it ended up breaking down, but not after, first ended up consolidating much more, you know, before it actually ended up crashing down, you know, hitting that weekly 20 EMA as that profit target. But if I held it, you know, there's a very good chance that potentially would have been stopped up, you know, that my stop loss would have been hit if I held that position. So that's why I use the management techniques that I use. You know, every single one has its benefits. Sure, you know, if I had maybe held it, I potentially could have made that 4%, but that would have been a lot of consolidation sideways, you know. So my management strategy, the one I like to use out of the few that I will show you, you know, I use all of them, but the one that I mainly use on these setups is, you know, if the trend is reversing and I'm already sitting at pretty good profit, I will simply take my profit, move on, wait for the next trade. All right, so that's kind of it, you know. So we just gonna wrap up with this lesson. You know, it's almost an hour into this lesson, so that's almost a total of 3 hours for this initial breakout strategy, and this will conclude the initial breakout strategy. You know, so in this lesson you learn the 3 types, A, B, and C, how they differ, okay, and how to execute, whether it's an A, B, or C, what you need to be cautious about, what you need to wait for. You know, if you have to wait for something, patience is key. Remember the term risk manager, a professional risk manager, you know, and that's going to come in other strategies as well. But that's how I like to execute things. That's how I like to execute the strategy. So at this point, you guys learned the whole strategy. You know, you will see and learn other strategies from now on. Now you're going to dig into my favorite strategy, you know, which is the CBO, complete breakout, okay? And that's, yeah, that is my personal favorite strategy. And it's the safest strategy out of them all. It doesn't have this risk, you know? So in this lesson, we categorize the IBO based on the 4-hour time frame, you know, between A, B, and C. Well, the CBO, it's not an issue. The 4-hour to 50 EMA is not an issue. It's actually a confluence factor, not a risk. You know, so that's why that is one of my favorite strategies there is. So I hope you guys enjoyed this one. It's a great strategy. You will have a lot of opportunities with this one. It's one of the most common strategies out there, you know, so definitely learn it, definitely master it, you know, back test it, get a feel for it, you know. But now you should, after 3 hours, there's so much content here, watch it again before maybe you dig into the next strategy. You know, it's important. Master one first before you kind of dig into another one. But the second one, it's a basic strategy too. So in my opinion, you can work through both. You can get a feel about both before digging into the advanced strategies, which will be strategy 3, 4, 5. Those are advanced. Strategy 1 and strategy 2, they're basics. You know, they're basic strategies, but they are the strategies that are the most common in the market and the safest ones as well. You know, so for a beginner trader, if you guys are beginners, definitely learn this one, master it, and then learn strategy 2, the CBO, master that. Get a feel for it, become consistent using these 2 strategies, and then, you know, dive into the more advanced ones. Because you gotta remember, me personally, that's how I did my journey too. You know, I learned the strategy 1 first, then I learned strategy 2, then a year later I learned strategy 5, which is the phase line break. A year after that, I learned strategy 4. You know, I learned my strategies in chunks, you know, so pretty much a year apart, every single one. And that's because I had to figure things out on my own. I built majority of these strategies except strategy 1 that was again created by Lewis Mocker method by Lewis Mocker from Infinite Prosperity, and I have changed it around. I have fine-tuned it to the way I like to trade it, you know, and that's how you guys have seen it here, using the 4-hour time frame, categorizing it with an ABC, how I like to execute my stop losses, my targets, and all of that, you know, so kind of created my own. But again, it's important to understand that I personally took me a while to learn all of them, to master all of them, to create all of them, you know. So for you guys, it's also important to learn the strategies in stages. You know, learn strategy 1, get confident in it, move on to strategy 2, you know, become confident in it. So you can watch all of them right now because you'll learn something as a beginner. So watch them all if you want. You will learn something. But when it comes to execution, master one, move on to the next one. Master the second one, move on to the next one, you know. And once you become consistent with the first two, with the basic strategies, then I would say go into the advanced territory, you know. But reach consistency first. You want to start making money, right? So reach consistency, then move on to the advanced ones. So that is it, guys. Again, I hope you guys enjoyed it, and you should have all the tools required and all the knowledge required right now to execute strategy 1, you know, and you can execute it as a swing trade or as a day trade. And you guys saw all options in the previous lessons. So with that said, guys, take care, and I will see you in the next strategy lesson.